If you're looking for professional day trading education as well as high-level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional trader for the past 11 years, and I'm here to bring you exactly that, professional day trading education, all here for free on YouTube and on X. And tonight we are going to be going over multiple trades. We're going to be talking about hedging. We're going to be talking about patience. We're going to be talking about strategy. I'm going to go over all of my entries and exits, P&L, trade plans, the whole nine. So let's rock and roll. Give me 1 sec. I'm going to fire up my charts. I hope you all had a wonderful day. There we go. 1 sec. Sorry about that, folks. Okay, now that we are into the charts, let's go over this. So very first trade plan, and I was working alongside my live trading members, which is a little bit different. I run both screen shares simultaneously, and I go over slightly different lessons that normally traders wouldn't put themselves into those positions. We work on very specific things. Live trading, it's a very different live trading course than most people would expect. Most people would expect, you just bang off trades and that's it, where you're not going to learn anything. You're not getting value for your money, where I'm actually wanting to build professional traders. So that's what I do Tuesdays and Fridays. So today, the very first trade plan was a little bit different. We had multiple resistance levels on the way up, and it was looking like we were going to open up real high into that last resistance level. So we wanted to wait for it to sell off and then pop back up, which is exactly what it did. So this was the exact trade plan that I drew out prior to 9 a.m. I said, what we will do is we will wait for this to wash out, pop up. We will execute here and add here, and then accept our risk. And then we would bring in our risk profile if we had to. Now, once we executed, we have to pay ourselves on the way down. You have to pay yourself at the first level of support on the way back down when you're in a short, no matter what, even if it's only that much, doesn't matter. You have to. Those are the rules. So sold into that. And then my main target was low of day, which was right there. And those that directly reflects my entries and my exits. Now, you might see this and be like, yeah, but you missed out on all of this. Yes, you're correct. But generally speaking, there is a secondary trade that you could get involved with. And this is what the plan was. Once it holds, and I said, even if it holds this support and comes back up, once it retests this, that would be our secondary entry. And then we'd work a secondary entry and a secondary position, and we would pay ourselves a little bit here when it comes down and tests that support, and then work it down into this. We just didn't get the setup. And that's what people need to realize. If these charts don't set up, now I'm not talking setups like fucking double bottoms, double tops, and all that horse shit. That doesn't work at all. Okay. But that's not strategy. I'm talking letting your strategy set up for you. Okay. So I mean it in a very different respect than most people that you will hear talking about setup refer to it as. Okay. So that was the first trade. Locked in a very small amount, $232, just on very small size. Generally, the very first trades that I take in the morning when I'm working with my live traders, I'm working with very small size that they would be using. So then they can get an idea of how much to size in and size out and all that sort of good stuff. So next entry here, let's talk about Qs. So Qs gave us on this an opportunity. If you take a look right here, when it comes down, there is right into, I think it was, let me check the time. Yeah, it was right into that, about 50 cents away. I think my price point that I wanted to trigger at was 502.08 or 06, something like that. It was right in here. So that's the first entry. We want to start averaging into the long. Now, it looks like it's very long away, and that's okay. I'm prepared for that. So there was actually a little bit of a bounce off of the level here, and that's what that payment was. As it starts coming back down into the level, I'm going to start working a secondary position on this, because if you look at the daily chart, now look over here on the left-hand side. Okay, this is the chart I'm now referring to. We have this here, okay? So we have that low of day. Then we have the previous close backed by this previous close. Okay, so we have a previous close gap fill backed by the 5 EMA on the daily. There's a lot of protection there. Next level down, it has the 9 EMA. Now, normally, and I'm going to show you how I would normally manage this position. It just didn't do that for us. And I talked about this yesterday about the relationship between distance and retracement. We did not get retracement, therefore I will not sell. Even if it is outside of that general and broader risk profile and risk parameters, I will not sell that, because what happens normally in a position, if I enter here and it breaks through that 5 EMA, okay, if that 5 EMA is roughly right here, it'll break through and then pop up and retest this. So I would add into the 5 EMA, let it retrace, and I would get fully out. And then I would flip short to ride down into the 9 EMA. I didn't get that, but you could see it did happen after. So instead of it coming into the 5 and then bouncing and doing that, it decided to come all the way down into that 9 EMA. Is it a long ways down? Yes, it is. But again, what people watching this channel need to realize is I have been doing this a long time. And I know I say that a lot on this for people that watch this all the time. But with experience comes knowledge, and knowledge is education. So I understand the movement of these stocks. If we blow through multiple resistance levels and it comes into that next or support level, I'm kind of looking at it in a weird way, but into that support level here, okay, that 9 EMA, we're going to get a bounce. It will not blow through here, here, and actually you could even take it to here, right? So low of day, gap fill, 5 EMA, all the way to the 9, and it's going to keep going. It's not going to do that. It would need a massive dirty catalyst in order to do that, okay? It's already rare that it's doing this. That would make it so rare that it would happen once every, if I had to put like a realistic number on it, something like that would happen without a retracement at all. It just sells straight off like that. I would say that that probably happens once every 1.5 to 2 years. Like it doesn't happen. So those types of odds, I'm never going to stop out on something like that. It's ridiculous, right? So on that, I'm going to start in on my secondary position, very small. I will add into that 5, small, because I'm looking for confirmation like it did here to get my size in. And if you notice, this is where I'm getting my size in, is down at that 9 EMA. That's where I'm applying pressure, okay? Because I need to correct that average for when it does retrace into this level, I will be green. And I was. It was nicely green. So again, what I really want to put forward to people that are watching this is to keep that open mind and to keep the headspace that this takes a long time to be able to do effectively, and to trust these charts and to trust your strategy. Not every trade is going to be bing, bang, boom, bangs off the level like this short and then falls apart. Okay. Not every trade is easy. If it was, this shit would be so boring. I love when trades do this because I need to use my head. I need to completely eliminate all bias. I need to eliminate all opinion, and I need to rely on pure strategy and experience. And I did that, and it was an absolutely beautiful trade. I love this trade on so many more levels than what I'm explaining here, but I'm going to save that for my mentoring live class on Sunday. So really nice trade on this. Locking in $2,165 on a trade that didn't work. Really, one could make the argument that it is a failed trade, and maybe you would be right, but I'm still green on it. And at the end of the day, that's what matters, is being able to manage these positions effectively and not find yourself in a fucking jam. So really nice on that. And then at the same time, okay, I hedged a position on on SPY when it popped back up. Remember what I said when SPY came up and bumped its head? That's a perfect opportunity to hedge the position. Now, I'm going to explain so all of this comes together, and I hope you guys are following. On SPY, SPY has a level way down here, okay? So right in this area at that 9 EMA and that gap fill. And on that there, because we are below that, and it pops back up. One sec, I want to show you guys something. If we get into this, so it finally bottoms out, pops up, bumps its head there, I'm going to hedge that position. Now, I'm not going to pay myself like I normally would. Normally, I would pay myself right in here. That's not the intention of my hedge. My hedge is if this wants to keep going and I have to stop out and there is a loss there. Okay. So with the sizing that I had, it would be about, I don't know, probably about a $5,000 loss, somewhere in that neighborhood. Maybe 6,000, somewhere in there, which I know that sounds like a lot, but take a couple zeros or a zero off of that, guys. Like that's how I look at sizing like that. Like that doesn't bother me at all. So that's what it would be. Now, what you need to realize is on this, all the way down to this 9 EMA, and at that time it was around here. With that entry coming all the way down, holding full size, because that would be my target, because that's where it would magnet it into, okay? This trade, I would take it all off into that, on that hedge, and although I would be red on this position, I would make up for that on this with smaller size. So I'm holding a smaller position so it doesn't damage me, right? Because I don't want to take away from my profits on the long if that starts coming in and I need to clear that short position on SPY off. It counteracts it. You just need to hold longer into that next level. Now, that's not an easy task, and I don't recommend new traders, or even if you're struggling in any capacity, don't hedge your positions. You're going to fuck it up big time. So while I was working this, you're going to see a bunch of extra entries down here because this started coming up and I was really managing and focusing on this. So as it's coming up, I'm allowing it to, I should clean this up. Sorry, guys, one sec. So right in this area, as it's coming up, okay, I'm adding heavy because it will want to test a level of natural, which is that's where it came down into. Okay. So I know that I can add heavy and make some good money just on a real quick little trade, which is what I did. So I corrected that average. I only had small size on that, looking for the hedge. The hedge is over. That's that. Now it's a separate trade. Now I'm just continuing to work that position in a different way. So I'm adding real heavy on this run up, okay? Because it's not going to go any higher than this right here because of natural price movement, natural movement theory, which is my price action strategy and methodology. And that's for members only. I'm not getting into that here for free on YouTube. No fucking way. So on that there, that's where I'm adding into real heavy. And then on that pullback into here or lower, I'm going to pay myself. I'm going to make some good money. Just about locked in about $4,000 on that. So overall, another really beautiful day. And again, before I wrap this one up, and I know I've said this like a couple of times, and I do mention this quite often. I understand when you're looking at this, like some of the stuff that I'm doing can look fucking crazy. But again, like I said earlier about keeping an open mind and open eyes to this, you cannot discount experience. 11 years of true consistency in the markets means something. It's not 11 years in the markets and not knowing what the fuck you're doing, okay? You have to remember there are traders out there that are extremely good at what they do. And if you're worried about stocks going up or down a little bit by a couple of points, you're just not on the same level. so you can really learn something. And that's why I'm doing these videos. These videos that you're seeing and the way I'm dissecting it and going through it, I know for a fact nobody's going through that on this level of detail and professionalism. So this is what I'm trying to give you guys for free. This is some pretty high level free content. So if you are watching this, maybe this is your first time, you do have to like and you do have to subscribe to the channel. I think that that is only fair. And for those of you that don't want to piss around and you want to learn from a proven professional that has been doing this for a very long time and someone that can actually get through to you, come to tricktrades.com and I will certainly be there for you. Okay, guys, I hope you have a wonderful day. See you tomorrow. Adios.